Well, I think the SPAC is a bull market product, and it is also a product of significant liquidity in the space. I don't think a lot of institutional investors, at least, are choosing to invest only in SPACs instead of IPOs, for instance. It's really a diversification of asset class within the equity market. So a lot of people who are invested in IPOs, they're spreading some money out into SPACs. And you're also seeing some institutional investors, private equity and hedge funds that are sponsoring and starting their own SPACs or investing in them. But the risks for an investor, again, in getting into the SPAC is relatively limited. The advantages are that there's a lot of optionality. You can put your money into the instrument. If they make an acquisition, great. If you don't like the acquisition, you can get your money back. And if they don't make the acquisition, you get your money back. That's a pretty good deal. For the founders and the managers, they typically have warrant coverage, so they're getting more bang for the buck. So it's really lucrative for them, which is why you see a ton of very notable investors getting into the SPAC game, because frankly, it's really lucrative. I think the risks are for the companies that are being bought. In some cases, great advantage. They can avoid the registration process, the longer registration process of the typical IPO, and they can go with sure. one buyer. It can be a quicker process, but at the same time, they're going with one buyer as opposed to distributing their equity across a much broader group at the outset of.
Right. James, just the fact that you said that this is a boom market product, a bull market product coming in at the peak, doesn't that raise a red flag?
Oh, absolutely. And but in the IPO space as well, the boom in IPOs this year is also a function of the extreme liquidity. That being said, there's no immediate end in sight for the amount of liquidity in the market. Remember, we're coming off of 10, 12 years of quantitative easing and extremely favorable credit markets, and obviously the equity markets over that period of time have been booming as well, minus some volatility here and there. You add into that the COVID response in the U.S. government's bond buying program and stimulus funding. There's just a tremendous amount of money awash in the market, and that has made investors seek yield wherever they can get it. So there's been a bit of indiscriminate buying, both in terms of the quality of what's being bought and the instrument that's being bought. But there's no immediate end in sight. But when the end comes, it's going to be pretty swift.